Greetings, and welcome to this week's installment of the Macro Measure. For all of you market rebels and chart gazers out there, we're going to go through the bigger picture stuff, and then a little bit later on, we'll be doing the sector situation video. I'm Wayne, my partner Ryan's trying to wrap up our market outlook for the week, which will be heading out later today. And it is September 11th, 2022 on the East Coast. It's a little after 12:30. And so let's get going after we take care of our, let's see if we can get some cooperation here. There it is. All right, so we did get the disclaimer this time. So that's an improvement over the fight that I had last week. And then let's see if we can get our intellectual property rights notice to work. And that seems to be working as well. So this is a big accomplishment versus, boy, the fight that I had on my hands last week. A couple of things were fighting with me this morning, but not so bad. So let's start to do a new share and get the right screen going. And hopefully this will all continue to work out smoothly. That would be very nice if that were the case. So, all right. I think we're almost there. Okay, so a quick recap of last week. So last week, I thought the most likely scenario would be that we crack this support line coming into it. Of course, everyone likely remembers it was a holiday shortened week. The tough thing that we noted, I think at the time, is that we had these two sort of pre-holiday weekend days, sessions, candles, whatever you want to call it. And it's tough to really read into those sometimes because you're not sure if what you're seeing is being exacerbated by the light, thin trading that you typically see, or if it's the real McCoy. And it sure seemed like after they opened on Tuesday, which was the first trading day of the past week, that this was this expectation that the most likely scenario would start to play out. But, and I'll show some graphics on this, but by the end of the session, you can see they brought it back up and they closed on the support line that we had in place there in the SPY. And so that was interesting to say the least. And then, of course, they opened a little bit lower, I believe, on Wednesday. And there was a little bit of movement below the low, I think. Let's see if we look up in this corner up here where all the price action is. The open was 390.43. The SPY had traded down to 390.20, and then that was it. So the 390 level had been a pretty big line for us. We've been covering this for a while. That level we thought was an important level. It turned out that it was more important maybe than I expected it to be. I thought there would be a little bit more follow through. We'd see what happened as my most likely scenario. But as we preach all the time at Market Rebellion and all the services really that Ryan and I and Greg co-manage, these are the reasons why you always have to remember that it's about being nimble and recognizing when things are changing. So again, forecasts are good, but you've got to also recognize when the forecast that you thought was most likely isn't playing out. And so the way that worked out, and we flipped around, and I'll show you sort of how we flipped around on things, but let's see if I can get the right cooperation here to show the initial one. So we showed this one, this graphic here. Let me see if this will cooperate. Let me pull it down. Okay, I've got a little bit of a monitor battle going on. So let me see if I can pull this over, and it looks like it will work. So put this into Rebel Pit the morning, I think Tuesday morning, noting that the intraday, heavy duty intraday timeframes were showing oversold on RSI. So that was your 4 hour, your half day, and that we were getting very close on the RSI on the daily at the time in the SPY, just a little bit above 30, which is for most people the oversold level officially, which we always say, close enough is close enough. But at the low, it was probably a little bit lower. Ended up being an important note there because that was really the low, I think, for the week. At that point, that it traded down to 388.42 at that point. Might have gone a little bit lower, but ultimately this was really where they pulled off the old false breakdown, right? And this is why I try to warn folks. I always think this myself, but try to warn folks, hey, this could be legit, right? But you always have to be on the edge of your seat, ready to realize that no, they probably drew a lot of new shorts in there. Some people are thinking this is the breakdown. And then, of course, they reverse it. Now, what we did see in the news was that the CTAs, the commodity trading advisors, they were back to being, I believe, heavily shorted. And there was some massive hedging that went on, apparently, with put purchases. And so that can and did seem to possibly influence the action that came after this. And of course, most of us will recall, right, that it was up and away, which of course we'll get into. So a lot of these things are interesting. The other interesting factor is that, look, this was a pretty significant 3-week drop. So it's not a shocker, right? You might have your scenario where you think it keeps going, but you have to recognize it sooner rather than later, right? Is always better. That maybe that scenario isn't in the cards right now, and that the gang is going to try to unleash something else, right? So let me try to bring up one more quick pick. So we noted this, and that's not, there we go. We noted this as well. Let's see if I can, this was also in the webinars this week and also in the, let's see if it cooperates with me. I need to get this pick down here. So this was a secondary pick, and you can see that there's your low that we were just discussing. So this is really the next day, and you can see that for the 4th day in a row, that 390-ish level right near there loomed large. You can see it's noted there. So you can see some of these momentum indicators, if you like, they are starting to improve at that point, and there's some momentum developing at that point on Wednesday. So 4 days in a row, couldn't crack 390. Remember, oversold conditions on your 4-hour, which is the heftiest time frame I use, that's sub daily, and got close to oversold on the dailies. So again, close enough is close enough, and then they took out that orange resistance line I had drawn there, and then we went into another scenario, right, of moving towards the upside. So that's all I really wanted to do, was just to rehash that. Fortunately, I do know that some rebel pit traders had mentioned that those notes, those technical notes, and really those picks there that went along with the notes were helpful to them in terms of making adjustments on what they expected. And fortunately, that's good. And I loved hearing that our traders are realizing what we always harp on, which I kind of feel like we over harp on it, but sometimes I get messages from folks that say, no, you don't harp on it too much for me. I need to hear it. Keep telling me. But just that you don't need to get perfectly oversold on RSI or stochastics. If you're close, you're close. If you're close on even larger intraday timeframes after a drop like this, and you're near what is large support or critical support, it can sure turn, and it did. So the news even came out, I guess, with Powell's speech that it was pretty much the same type of stuff he's been talking about. And again, the market just didn't care about that. So it really was maybe priced in or factored in at that point. So you get through this resistance line that we had, and then you start working your way up towards the SMAs, and the gold is the 50, and the dashed white line there is the 100. And it got to there, just below there, halted on Thursday, and then you could see, I'm sorry, on this was, yeah, that was Thursday, and then here you are on Friday, and they really closed strongly above my next resistance line that we had in place. So I'm have to say that I'm somewhat impressed by the situation that developed here. We'll come back to that. I just want to show that in the this is the kind of stuff that's, remember, they're kind of ignoring, right? So let's take a look at this, and we'll come back to the charts. But here's the September Fed meeting with the current Fed target rate is 225 to 250. Looks like the market is expecting it to rise at least to 3, if not, 75 basis points to 325. That's by September, which is coming up soon. So that's, I guess we're probably about 10 days away on that one. Now, if you go a little bit further out in time, by the end of the year, right? This is the middle of December when it would happen, but this is, I think, is the last Fed meeting of the year. They're expecting to leap up in September, but then that's continuing to go up significantly from there. So the likelihood of going up even from that 325 level in Sep to somewhere between 50 to 75 more basis points is 71% almost. And even beyond that would be a 21% chance. So in the face of that, this is what is happening in terms of this rally. And that's why, again, you wonder in the short run, right? People wonder, well, why are they doing this? Doesn't make any sense. But in the short run, they do this kind of stuff all the time, even in light of things like this that would seem problematic. Also, here was the 10-year minus the 2-year US Treasury yield. And you can see that this is currently negative, right? And this is always big talk, right? When this relationship goes negative, the gray areas are your recessionary periods, I believe. Excuse me. Yeah, shaded areas indicate US recessions. You can see that when this occurs, you typically get recessions, maybe not every single time. Here's one where it took quite a while, where there was a brief kind of a negative inversion there, if you will, or excursion. It took a while, and this deeper one, of course, led to that particular slowdown there. This protracted situation led to the situation post-housing market. We had a little bit of this that was showing up, and then, of course, the whole COVID $7 trillion of lighter fluid or whatever, pick your number, the lighter fluid that got injected, probably you did get a little bit of a recession there, mini recession or whatnot, but then, of course, that all took care of the COVID response, took care of that. And then here's another one that's pretty deep. And then if you even want to look at the 10-year minus the 3-month, which some people like to look at, this also over the course of time, it tends to be a little bit in front of recessionary periods. And that's not quite there yet. But if that does trend down lower, go negative, right, that would be another kind of confirmation if you want to look at the rate relationships. So there you have it. That is all unfolding, and yet the market's rallying. But let's look at maybe why the market decided to do what it did a little bit more. We did make a case that the SPY was oversold on some heavy duty intraday timeframes. The daily was very close to oversold. The drop had been significant. 390 was a very important level in our mind, right? The way that we were viewing things. Well, let's go a little further. Let me see if I can get the right charts to pop up on the right screen. This is never easy with 4 screens, and PowerPoint seems to throw off the whole setting for some reason. Where is there it is. This one is what I'm looking for. So this is just a brief look, but notice, right, that all these levels that I'm going through on the first 4 subgraphs here, you kind of start to see this all pivot. And so you get to see where the advanced decline line, various things related to that, cumulative volume, really the McClellan oscillator. This is what I want to focus on most. If we look at the McClellan oscillator, this was fairly deep down there, right? You have to go back to not just there, but you've got to go back further to really get to these levels where you could say the market was oversold, almost kind of like a MACD reading, sort of type of a thing. If you want to go that far on the advancers, decliners, et cetera, but not really delving into the indicator. It's just got to a level where a lot of things were oversold, and you could see the momentum started shifting. So after 4 days in a row of holding 390, they really started to pick things up and go from there. Another thing we could briefly look at is the sectors. Quick view of our sectors. And you can see, if I go through here, by the end of the week, every sector really that of the main 12 that I chart on this view, every one of those moved up. So this wasn't just yes, there was some short squeeze for sure in my mind happening. And there were some folks that were ill positioned and overhedged. And the market tends to frustrate, excuse me, those parties. And it does so with glee and with great frequency. I'm in on all that, but I'm not shrugging off this rally and saying it's doomed to fall apart immediately. Maybe it will. It's just that it's got some characteristics that I feel as though you should acknowledge that have some solid characteristics that maybe argue for them to try further. And that's what I think. I mentioned this on Cocktail Hour on Friday, but the way that I'm looking at things, I think they continue to try a little bit. I think that they're going to at least try to work up towards this retracement at the 50% level, which is 410. only, maybe just another 1% roughly away. And that's also where the 20 SMA comes in. So I think that's pretty much, I won't say a lock, of course, nothing ever is, but I would think that happens. There's also the 150 SMA there in Rust that dovetails with currently with the 61.8 retracement of this whole drop. So that would be another level. And you could see that right near there, and there's definitely some flat line stuff going on near there from back in here, back in here. So that's also a big level. I would think if it gets through the 20 SMA, that would be your next level to trade up to 415, 416. Then we go from there. If you're someone that likes to think, well, hey, if they're really going to overdo their the rally, maybe they'll come back and close this gap here, and maybe they will. So why not? We'll just put a little notation on there since I'm here and we're doing this right now. Let's just note that there's a little gap there, and it wouldn't be utterly crazy, right, for that to happen. Look at the kind of movement they've already put together. I don't know if you close the gap this week, but I certainly wouldn't rule it out that it could certainly pull that off. And then by the time it likely works its way up to there in that scenario, it would also have this declining 200 SMA in purple. It would be somewhere near there. And of course, that became an important factor here. And there were other factors as well that we noted at the time, but this became an important factor. So the 200, that is. So it could happen again. Do note as well that this low here is definitely higher than some of the other lows that are anchoring that support line. That's very clear to see. So we could, and this is why I refuse to, the reason I refuse to rule anything out if you're new to the way that I like to look at things is because I traded through 1998 and 1999 on the options floor at the Philex. And that was something that I'll never forget because it was so beyond, it was surreal is the best way to put it, I guess, versus normal trading times that before and after, really. And when they effectively doubled the NASDAQ after it already had an incredible run, when the gang doubled the NASDAQ in about a year's time, maybe a little bit over, not just one stock going haywire to the upside, right? The whole index went haywire. And boy, that was something to see and trade. And I won't rule anything out for that reason, because I never would have in a million years thought that would be possible after how far it had already ran. It was an entire index, but it happened. And so this could be, right, if you look at it, if we put a vertical line here, we'll just use the cursor for now, but looking back on this, it is possible that this was the start of a trend change where you started to see higher highs and, generally speaking, higher lows. And if they bust this thing out and through, it could ultimately be, this was a great place, right, to really start covering your shorts that were longer term position, things like that. So I won't rule that out. I don't think that's happening yet. Stranger things have happened, however, and I do respect what's happening here, because this wasn't just, it was across the board buying in all the sectors. There was the McClellan oscillator starting to roll back higher right after being oversold. And so the RSI on the daily charts on the SPY is at 50. You can see that over here, but that's not very high, as we all know. That's right, that's neutral-ish. And so this could very well continue on. There's plenty of room there in terms of that oscillator view for it to continue to roll. This dip just didn't really meet the heaviness factor the way that this prior dip did here. So this is all a little bit kind of encouraging that way, but I'm still treating this like once we get up to this 200, if we do go there, that is going to be a big thing. We'll have to see what they do. Did they create a slightly higher high with a false breakout, then pull the rug? Remember that the seasonality tends to be positive in the middle third of September. And then as you get towards the final third of September, it tends to be negative heading into October. So things are kind of unfolding more or less the way they typically do, week early, stronger, mid-month, and then we'll see what happens from here. But I don't think you can rule this out. And if we rule out more upside here, and I think if you look at the weekly chart, just look at the RSI over here. And on the weekly chart, this was more of a bullish kind of engulfing, or at least a strong bullish reversal candle, depending on how you want to define it, look at it. And you're at 50-ish, 48 really, but 49 if you round it, of course, but you're not overbought on the weekly at all, right? So there's room. If they want to do something, there's definitely room for them to do something. And I'm thinking, okay, maybe if we let's look at like a 2-hour, right? If we look at the 2-hour, that's giving us a 66 reading over there on the RSI. So did it get a little overbought? Not really, but is it getting close to it? Yeah, it is. I mean, it definitely is. So it got on the highest close, the RSI got to 67. So might be a little short-term overbought. Maybe they pull back a little bit. Again, always barring news, because we have no idea what news is potentially impacting before we open for trade on Monday. But bottom line is, I'm not fighting this thing yet. If I'm a long-term bear, I'm going to wait for this thing to do its thing and then start showing me signs of rolling over. And so another thing that might add to this would be what I'm about to show us now, which is Apple plus Amazon plus Google plus Meta plus MSFT. So these big dog stocks are all going to be combined together as a little mini basket. And you can see that the technicals do not look atrocious, right? If we mouse over, we're going to get a 48 RSI reading. So if these heavyweights start to churn more, and they really are rounding up, they did push through that resistance line on the group. And then you can see the volume was picking up there. Not a bad sign, right? It's not a heavy weight for me, but it's not a bad sign. I'd rather have it with me than not. And so this trading up to the 20 at least, or even the 150 in Rust wouldn't be out of the question, right? So these look primed to continue to go. They're certainly not overbought. They've got to get through the 50, 100, 15, right there. All those SMAs are kind of bunched together, just about where we are. But yeah, I mean, higher low put in there on the big players. And if we go through some of these individually, right, if we look at these individual charts, Apple is very close. I mean, it could definitely break out above the 50, my resistance line, and also the 10, which is all there, and maybe take a run towards the 200. Now, we're only talking about maybe $4 or so. It's not an incredible move, but remember, a lot of things key off of Apple. A lot of things key off of these bigger names, and if they're acting well, people feel better about the market. Let's take a look at Amazon, see how that's primed to go. That is right near resistance, which could produce a little bit more of a breakout. Okay, so that looks primed to go. It too is not, if we come back to here, just remember to take a quick look at those RSI numbers. It's at 53. So, right, we're in a position right now where it wouldn't be shocking if they just need to break these things out a little bit more, and they should have more room to run. You could probably run up to the 50 here in Google. Again, only about 3%, but still 3% more. 3% in the SPY would be around 12 points from where we are right now, and that would put us at 418, and we said 416-ish, 415, 416 is a big level. So it all kind of plays out that way, that a lot of things can move. Here's Meta, and you can see that's coming off of this base we've been charting. It just got above the 20 and the 50 there in blue and gold respectively, right? So that does also look like it could try to move up towards one of the higher parts of the channel it's been operating in, which would be near the 100 SMA up there at 161. I'm sorry, I'm looking at the wrong one. That's the 10-day, the 177 level, my bad. So you get the idea there. I mean, in one last one, we may as well look at Microsoft and maybe Tesla or Tesla. I'm not even sure how you're supposed to say that. I think I alternate. But the 50 is at 270 on the MSFT there. So that the 100 is a little below there at 268. But you can see that's rounding up. If we take the time here, I don't want to draw these videos out. I want everyone to get a lot of info quickly, but reality is, like, look, it just took out that resistance level. And so that it wouldn't be crazy. This is just how I chart. I expect it to try to come up to the next one now that it got through there, the next form of resistance. And the main resistance would be near the 150. So ballpark it at 269. Again, not a monster move, but then through there would be your 20 in blue. And then through there would be, I would look at the 150. And of course, there are flat lines in here that Ryan would also provide us with. So there could be some confluence of resistance. But bottom line is, right, that doesn't look primed to just fall apart at the moment. It could, of course, news could change everything by Monday morning, but these do not look bad. Let's take a look at Tesla. And so you can see, or Tesla, that is above the 200 there in purple now. There was a really nice trade that actually happened for us, fortunately, in UOA Pro. So our guys, our analysts in UOA Elite did a great job of finding that Tesla UOA, and that really worked out by the end of the week. But look, this looks pretty good. I mean, you get through this former high level here at 303, and probably, right, it starts coming up challenging these recent highs. And that's also a big market mover that a lot of people like to follow. So looking inside the market a little bit, kind of a little more than the scope of what we normally do, but got to admit that these things don't look bad. And so like, even if you're kind of like a long-term or longer term bear, the way that I am, and you are thinking that way, like, we just don't trade it that way. We don't chart it that way. We try to be objective about what's happening and act accordingly. And to kind of show you that the proof is in the pudding, here's the UOA Pro that I spend my whole day in practically. But on Monday, the first day of the week, Tuesday in this case, we had some bullish and bearish ideas that were new, some combination of both, really. But if you notice what happened, right, once I started to see support hold on Wednesday for the third day in a row and started to see some good things happening that particular day in terms of the action in UOA and also in the markets, some of the stuff I like to look at during the day to see how the market's health is, they were looking bullish, right? So here I am thinking, okay, coming in, they're probably going to break this thing down, but willing to completely change, right? Add nothing but bull ideas here. These are all bullish ideas that got added on that day. If you notice, every idea that came in on Wednesday was a bull. Every new idea was a bullish idea, I think. Pretty sure anyway. But then even that really continued, right? If you look the next day, I'm just going to go along with it, right? And just say, look, there was support there. We noted there was support there well in advance. It became very important support. Market got close to oversold, and it was oversold on heavy duty intraday levels. And boy, I'm willing to take these trades the other way because it's bouncing, and we'll see how far the bounce goes and adjust accordingly. So almost everything we did, we put a couple of dual or bi-directional ideas in, but even everything on Wednesday was really almost all bullish. There were a couple of dual-sided ones, but there were only two of them. Almost everything else was bullish. And then I'm not even sure about Thursday, but I think on Thursday, you can see the new ideas were bullish, just continuing to go with the flow. Now, I don't always do this, but I thought it was an important turning point, and Ryan did as well. So we really adjusted ourselves as the week wore on to just continue to embrace the new bull activity that was happening in the market. So the reason I haven't spent a lot of time talking about, say, the QQQ is because it's similar, right? It's a lot of these correlations are there, and it's kind of went risk on. You can see the Qs are right near critical resistance in terms of a line. There's the 15 SMA right there, but I think they're more than likely, the way things are shaping up, there's a couple different forms of lines that I've got there. It's probably trading up to the 20, not that much further. That's 1.5% in the light blue line. And then you're going to have a flat line up here, and you're going to have the 150 there in rust. But that looks primed to continue to try to go higher. And then the IWM, that also is right below some SMA resistance, but I think that's going to try to go up towards the 20 at 190. Again, not a massive move, but then see how it goes. If it can overtake the 20, right? This is how I do it anyway. If it overtakes the 20 and holds there, and the RSI and other factors aren't too overdone, I'm going to give it the benefit of the doubt to try to continue to go, because the bulls have essentially seized control, and we'll see what they can do. We'll see if they can continue to take that back up, and then we'll see if what they can do with the diamonds as well. So the diamonds are really very similar, right, to the other things we've looked at, other names we've looked at, and I'd expect that to try to take out this this ganglion of SMAs that it got stuck at on Friday and try to power towards that that 20 SMA there near 327 shade below there. There's definitely a flat line right near there as well. You can just see it very easily looking back across time. So RSI not even at 50 on the diamonds. So again, they could fail here, right? We could I always say walk in. I'm used to just saying that about because of all my floor days. But we could open up on Monday and maybe we don't get through here, and then maybe things start to retrace. And there's gaps that got left in many stocks and so on and so forth. But as of right now, the bulls seized control. There were elements of short squeezing, in my opinion. There were ill-positioned traders, overhedged traders, and the market's tremendous and frustrating people. And so I'm willing to give it the benefit of the doubt if these nearby resistance levels can be taken out. So that's really my probably most likely scenario to happen. Let's take a quick look at the dollar, and then a few more things, and then we'll wrap things up. But the dollar, this kind of got a little bit double top-ish. I'm sorry, negative divergence E would be a better way to put it. Higher high here outside of my Bollinger Bands. And then you've got your RSI reading here, which is a little bit lower. So a little bit of negative divergence there on the daily. If we look at this, I've done this before, but if you look at the dollar on the weekly chart, the RSI reading is at near 72. If you look at it on the monthly chart, it's extended dramatically, and the RSI reading is 78. Now, this is obviously due to what's happening right around the world. All the critical things around the world are likely driving this, but this is very, very powerful and a little bit stale. So you got to be on the lookout. And it could be possible that this would help aid equities cause, right? If the dollar starts to pull back further on the daily after what we've seen. If we start to see it take out the 20, drop to the 50, then maybe like flat lines that would be maybe down near 106. So that would potentially help. Now, TNX, this is your 10-year yield that we look at, and that too is a little toasty, right? And it's a little overdone up here to our Bollinger Bands, holding on to support for now. And so kind of a tough one to call because it hasn't broken anything yet. It's above all the SMAs, which all appear to be upsloping, which is not a bad profile, right? So that doesn't look so bad. So kind of, I would say the dollar and the TNX are a little bit at odds at the moment, but this is definitely up there. And I know that some folks have this heading higher, and some folks have the dollar heading higher that are heavy duty technicians that spend all their time on the technicals. I wish I did have a situation like that. That's what I really enjoy the most, but that's not the way the world works for me. So I stick and move with what I've got to do as much as I can with the technicals at the time that's allotted to me. But this is definitely up there. If we look at the weekly on the TNX, and again, it's kind of weird to chart it this way, like it's an equity when it really isn't, when we're looking at yield, but it didn't flip to the, did not flip over to the weekly, but on the weekly chart, it's also getting up there on your RSI. Oops, that's not a good view. Let's try to do monthly. And then you can see right here, which we looked at, I think recently, but that's at 73. So this is, could you start to see a little pullback that would help the market? I mean, it seems like it's primed to do that, but you can't call a pullback right yet unless you're trying to do some kind of, GAN stuff or fib stuff combined with Elliott wave, that kind of stuff, Astro. If you want to call that kind of stuff, I get you, but I don't see anything happening here on a weekly momentum basis or on a daily momentum basis, because it did hold, right? I personally trade in a way that I will never fight against something that's going up or going down. I wait for what I perceive to be a momentum shift. And if I see a momentum shift, then maybe I'll trade counter trend, but I don't like to get steamrolled or catch knives, as they say. And so I try to avoid trying to pick a level to act at, because I think it's an important level. I'd rather see it respect that level and then start to show me that it can't get through by showing me a momentum shift the other way. So those are our big ones. We'll take a look at the VIX. We got that one on our agenda here for the macro measure. You can see that came off. That's exactly what you'd expect. There's a little gap here. Again, it's very difficult to chart the VIX the way you would in equity. It's not really an equity, obviously. And so you can't really do the same things that you would normally do and expect. But what we have been doing is noting that when the VIX gets above here, it's a big deal in this kind of middle of our range. It's an imperfect range at that. But when it goes below, it usually does come. You usually expect it to come back down towards the lower levels, towards the 20-ish. And of course, the very low back there was 1845. So close enough is close enough, but that doesn't look very good at the moment. Of course, this would reverse on a moment's notice if need be, right? If the market shifts, it's going to reverse on a moment's notice. But it certainly doesn't look like it's primed to start moving back up at this point, and that's the important thing. So those are the big picture things. I think the last thing I really want to show that I've had in the back of my mind is to go back to this particular chart. Where is that one? I prepared a chart for us to kind of wrap up on. I just need to track it down. And I'm a little out of sorts here. I'm trying to see where might be this one again. Yeah, so this is the one we looked at, but I didn't note this. But up here, this is the 10-year yield. And so if we come over to SPY, we show the SPY as the candles on this particular chart, and you see the 10-year yield. Notice, right, that the yield you've been at these junctures where the market was rallying as the yield's going up, but if the yield keeps going, ultimately the market has fallen apart. And you can see the trend of TNX, 10-year yield, has been up this year, while we all know, unfortunately, right, that the except for all these put side traders, right, the bears have been having a great year, at least to this point. So there's your inverse relationship, of course, but right now, last time we were up here at this level, maybe, who knows, maybe yields are going even higher the way it seems as though they would, but this ultimately hasn't been good. And so we'll see if the yields start giving way and break down and the market continues to rally, or if the yields keep going and the market continues to rally anyway. That would probably be setting up for, right, kind of like a phase like this here, where overall yields keep rising and eventually the market has to succumb to that. Like we saw, back in here as well, yields are going up too. And then ultimately they keep going and the market has to succumb to it. So we'll see, but that's interesting that it's setting up again. As I said, my most likely scenario for this week is they try to keep pushing this thing. If they can get through the nearby resistance that a lot of things got stuck at on Friday. Remember, we're a little bit overbought in the short term on the larger intraday situations, but overall, this month is critical because a lot of cycles could get repaired in a bullish way if they manage to finish the next 20 days or so strongly. If overall, if we're up from here pretty strongly and we hold it at the end of the month, that could really be an interesting development that you just have to respect, right? And even if you don't agree with it, even if it doesn't make sense, you'd have to respect that, because we would be coming into what seasonally tends to be a good period for the market. We all know that Wall Street likes to make themselves look like brilliant geniuses at the end of the year, when everything gets marked out for the year in terms of performance. And we know if they can get close to spurring on that dramatic year-end rally, they certainly will try. We know that. So I hope some of the information we've covered is helpful to you. And I'll be back doing the sector situation shortly. I hope you at least got one nugget out of this stuff this week. And hopefully we'll have some clear sailing tech-wise from here on out. And thanks for tuning in. I'll see everyone through updates and webinars and so on and so forth this week at Market Rebellion. Thank you.